If you checked your bank account this month and felt like something just did not add up, like the number was smaller than you expected, you are not imagining things, and you are not alone. Thousands of Canadian seniors receive their OAS and GIS payments every month and still feel uncertain about exactly how much of that money is truly theirs to keep. Today, we are going to walk through that question carefully and honestly. Not the government brochure version, the real version. How much do you actually take home from your old age security and guaranteed income supplement after tax in 2026? My name is not important. What is important is that by the end of this video, you will have a clear picture of what affects your take-home amount, what the tax rules actually say, why your neighbor might keep a different amount than you, even if you both get OAS, and what steps you can take to make sure you are not overpaying or underpaying the government a single dollar. Let us start at the beginning. Old age security, which most people call OAS, is a monthly payment from the Government of Canada. You qualify for it based on how long you have lived in Canada after the age of 18. It is not based on whether you worked. It is not based on whether you paid into it like CPP is. It is simply a benefit paid to Canadians who are 65 or older and meet the residency requirements. The full OAS pension as of early 2026 is in the range of $470 to $740 per month, depending on your age, how long you have lived in Canada, and when you chose to start receiving it. The Guaranteed Income Supplement, or GIS, is different. GIS is an additional monthly payment for low-income seniors who are already receiving OAS. It is income tested, which means the government looks at how much money you made the previous year and uses that to decide how much GIS you get. GIS is designed specifically for seniors who have very little income beyond their government benefits. For 2026, a single senior on full GIS can receive over $1,000 per month on top of their OAS, but that number is adjusted every quarter based on inflation, and it goes down as your income goes up. Now here is where things get confusing for a lot of people. Both of these benefits, OAS and GES, are taxable, but they are not taxable in the same way, and this is the part most videos skip over too quickly, so we are going to spend real time here. OAS is fully taxable income. That means when April comes and you file your income tax return, every dollar of OAS you received during the year is counted as income on line 11,300 of your tax return. The government then calculates how much tax you owe on that income based on your total income for the year. If your total net income, meaning everything you received from CPP, OAS, any pension, any RRSP withdrawals, rental income, and so on, is below a certain threshold, you may owe very little or even no tax at all. But if your income is above the basic personal amount, which in 2026 is approximately $16,000 federally, then yes, some tax will apply to your OAS. GIS, on the other hand, is a little different, and this surprises many seniors. GIS is technically taxable income. It appears on your T4A slip from the government. You report it on your tax return. However, in most cases, because the seniors receiving GIS have very low incomes overall, their total income falls below the federal and provincial tax thresholds, and they end up owing zero tax. So for most GIS recipients, GIS is reported on their return, but no actual tax is taken out of it. The government does not withhold tax from GIS payments the way an employer would withhold tax from a paycheck. This is an important distinction. OAS often has no tax withheld at source either, unless you specifically ask the government to hold back some tax. This means many seniors receive their full OAS and GIS payment each month, and then in April, they discover they owe money to CRA. That can be a very unpleasant surprise if you were not prepared for it. Let us walk through a real example so this makes sense. Take Margaret. She is 71 years old, lives alone in Ontario, and receives the full OAS pension. Let us say she receives approximately $700 per month in OAS. She also receives approximately $950 per month in GIS because her only other income is a small amount from a workplace pension of about $400 per month. Her total monthly income is roughly $2,050. Now, her annual income from all sources would be around $24,600 per year. On that income, after applying the basic personal amount and the age amount, which is a special federal tax credit for seniors, and the pension income amount, Margaret's federal tax owing may actually be quite low, possibly under $500 for the year. Her provincial tax would depend on Ontario's rates and credits. But here is the key point. If no tax was withheld at source from her OAS or GIS throughout the year, that $500 bill arrives all at once in the spring. For someone on a fixed income, that is not small. Now let us take Robert. He is 68, also in Ontario, and receives OAS of about $680 per month. But Robert also has a company pension of $1,800 per month. His total monthly income is roughly $2,480. His annual income is around $29,700. Robert does not qualify for GIS because his income is too high, and because his income is higher, more of his OAS will be subject to tax. After credits, Robert might owe $2,000 or more at tax time if nothing was withheld during the year. These two examples show you that the amount you keep from OAS and GIS really depends on your full picture of income, not just the benefit amounts themselves. So how do you figure out what you are actually keeping each month? There are a few steps to work through this. First, you need to know your total annual net income. This is line 23,600 on your tax return. It includes CPP, OAS, GIS, any workplace pension, RRSP, or RRIF withdrawals, rental income, investment income, and any employment income. Everything, not just your government benefits. Second, you apply the non-refundable tax credits that reduce your tax. The most important ones for seniors are the basic personal amount, the age amount, the pension income amount, and the disability amount if you qualify. These credits directly reduce how much tax you owe. They do not reduce your income. They reduce the tax calculated on that income. There is a difference. Third, once you calculate your estimated federal and provincial tax for the year, you divide that by 12 to see roughly how much tax per month you are effectively paying out of your benefits. That tells you your real take-home number. Here is a simplified way to think about it for a typical GIS recipient. If your total income for the year is under approximately $22,000 to $24,000, and you are using all available credits, your federal tax may be near zero or very low. So in that case, you are keeping almost all of your GIS and OAS. But this is exactly why you need to file your tax return every year without fail, even if you think you owe nothing. CRA and Service Canada need your return to confirm your income for GIS purposes. If you do not file, your GIS can be reduced or even stopped entirely. That is not a penalty. That is simply how the system works. GIS is recalculated every July based on your previous year's tax return. Let us talk about that recalculation. because it confuses many people. Every July, Service Canada reviews your GIS amount. They look at your net income from the previous tax year. If your income went up, your GIS goes down. If your income went down, your GIS goes up. This happens automatically once CRA shares your tax information with Service Canada. So if you had a one-time income event in a previous year, maybe you withdrew from an RRSP, or you received an inheritance, or you sold a property, that extra income counts for 1 year and affects your GIS for the following benefit year. After that, if your income goes back to normal, your GIS typically goes back up the following July. Many seniors panic when they see their GIS drop in July. They call Service Canada, thinking it is an error. In most cases, it is not an error. It is the system working as designed. The key question is always, did your reported income go up last year? If yes, that is likely why GIS dropped. Now, there is something important to know if you recently retired or lost a source of income. If your income has dropped significantly compared to what CRA has on file, you can ask Service Canada to estimate your current year income instead of using last year's. This is called the option to use current year income, and it can help you get a higher GIS amount sooner rather than waiting until next July. You would need to contact Service Canada directly to request this. You can call them at 1-800-277-9914 or visit a Service Canada Centre in person. Let us now talk about the OAS recovery tax, which some people call the OAS clawback. This does not affect most low or middle-income seniors, but it is important to know about. If your net income in 2026 exceeds approximately $90,000, the government starts clawing back your OAS at a rate of 15 cents for every dollar above that threshold. By the time your income reaches around $148,000, your entire OAS is clawed back. If you are watching this channel, this likely does not apply to you. But if you have a spouse or a family member who has significant investment or pension income, they should be aware of this rule. The clawback is called the OAS recovery tax, and it shows up on line 23500 of the tax return. One of the most common mistakes seniors make is not requesting voluntary tax withholding from their OAS. Here is what that means. You can contact Service Canada and ask them to hold back a set amount of tax from your monthly OAS payment. For example, if you know you will owe about $1,200 in federal tax for the year, you could ask them to hold back $100 per month so that you are not hit with a large bill in April. This is completely voluntary. It does not reduce your payment permanently. It is just a way of spreading your tax payment across the year instead of paying it all at once. To set this up, you can sign into your My Service Canada account online or call Service Canada and request a voluntary withholding arrangement. Another common misunderstanding is around GIS and income splitting. If you have a spouse or common law partner, some pension income can be split between you on your tax returns. This can lower both partners' individual incomes, which may help one or both of you qualify for higher GIS or stay below a tax threshold. This is called pension income splitting, and it applies to eligible pension income, which includes workplace-defined benefit pensions and RRF income in most cases. It does not apply to CPP or OAS directly. If you think income splitting might help your situation, it is worth speaking with a tax professional or using a free community tax clinic, which many libraries and community centers offer to seniors at no cost. Now let us put some realistic numbers together for 2026 to give you a sense of typical take-home amounts at different income levels. If you are a single senior receiving full OAS of approximately $700 per month, full GIS of roughly $1,050 per month, and nothing else, your total monthly income is about $1,750. Annualized, that is around $21,000. On that income, after applying the basic personal amount and the age amount, your federal tax owing for the year would typically be near zero or a very small amount. Your provincial tax would depend on your province, but would also be very low. In practical terms, you would keep very close to the full amount you receive each month. If you are a single senior receiving OAS plus a modest CPP of about $500 per month, and no GIS because your income is too high, your total monthly benefit income might be around $1,200 to $1,400. Over the year, your income is in the range of $14,000 to $17,000. After credits, you might owe a small amount of federal and provincial tax. Roughly speaking, you could keep 90 to 95 cents of every dollar you receive from OAS and CPP at that income level. As your income rises above $25,000 per year, the tax rate starts to apply more meaningfully. At $30,000, you might keep roughly 85 to 90 cents on the dollar after federal and provincial tax combined, depending on your province. At $40,000, you might keep closer to 80 cents on the dollar. These are general illustrations only. Your actual number depends on your province, your specific tax credits, and your exact income mix. CRA's website has a free tool, and there are also free tax clinics called the Community Volunteer Income Tax Program, or CVITP, which helps seniors file their taxes accurately at no charge. You can search Government of Canada, CVITP, to find a clinic near you. Here is what we want you to take away from everything we have covered today. Your OAS and GIS payments are real, meaningful income, but what you keep from them each month depends on your total picture, not just the benefit amounts. GIS recipients with low incomes typically keep almost everything. Seniors with moderate income from pensions and RRIF withdrawals keep the large majority but will owe some tax at year end. The best protection against surprises is filing your taxes every single year, understanding your net income number on line 23600, and considering voluntary tax withholding from OAS if you have other income sources. The government is not trying to trick you with these rules. The system is designed so that lower-income seniors are protected and keep more of their benefits. That is the purpose of the GIS in the first place. The challenge is that the rules are not always explained clearly, and letters from Service Canada and CRA can feel cold and confusing. That is why we are here. If you got a letter recently about a change to your OAS or GIS, or if your July payment looked different than you expected, check your My Service Canada account first. Look at the benefit breakdown, then check your most recent notice of assessment from CRA to confirm what income was reported. If something still does not make sense, call Service Canada at 1-800-277-9914. They are generally helpful and can walk you through your specific situation. We want to ask you something before you go. When you think about your OAS and GIS payments, do you feel like you have a clear picture of what you will owe at tax time? Or does April always feel like a bit of a surprise? Leave a comment below and let us know what you found most helpful from today's video. Your questions often turn into future videos, and we read every comment. If this kind of honest, clear explanation of Canadian retirement benefits is what you are looking for, please subscribe to the channel. We do not sell anything here. We just explain how the system works so that you can make informed decisions and feel more confident about your retirement income. New videos come out regularly, and they are all focused on exactly what matters to you. Thank you for watching, and take care of yourself.